Hello and welcome to the Crypto Jungle. My name is Baloo The Bear, and here on the channel, we are honest. We are one of the few people that are not paid shills. We never take paid ads. We just look at the charts, look at the volume, look at the structure, and try to determine if we are bullish, bearish, or flat. So if you're new to the channel, I want to invite you to subscribe. And let's not dilly-dally. Let's get into the king of all cryptocurrency, and that is Bitcoin. So taking a look at Bitcoin, I've got the daily chart here, but let's zoom out a little bit more and let's go to the weekly chart. So we've been watching this for a while. We are in serious bear market. Supply is in control. Obviously, there is a potential for a bounce. When we look at this kind of wick right here, there's clearly demand in this little area. Now the demand wasn't enough to reverse the trend. So we did get another red candle. We are on red candle number 9. Shout out to all those people that think, we're due a green candle. It doesn't really work like that. Downtrend is a downtrend. Markets are markets. Humans are humans. So we can print as many red candles as we can. Just because it hasn't happened in the past doesn't mean it can never happen. So what I'm looking for is I'm looking around 14K. That's kind of been my target. Now I will accept 20. I will watch how price behaves. It's not the price that matters. It's the event. It's the way that price behaves that matters. And this is kind of something that's very different for a lot of people to kind of understand. A lot of people come to YouTube and they want a price prediction. They want to know where the price will reverse. And when you're looking at the macro, it just doesn't work like that. If you're in the small time frames and you're taking smaller trades, small time parameter trades, you'll have a better chance of knowing where the ebbs and flows can happen. But when you're looking at the macro, especially in the context of a capitulation, which is where the market gives up, you're never going to be able to peg the price. It's more about the event and the behavior of the price after the event that can give you the information that you're looking for. So what I am looking for is I am looking for a high volume event. We can turn on our Wyckoff volume here. We did get a high volume event on this weekly candle. So that's why I was entertaining the idea of a potential bounce, but still holding true that, I haven't seen enough blood. There's still a lot of hope out there. There's still a lot of people counting on a bounce. And there's a large narrative out there that when we achieve the downside target, whatever that target is, whether it's 20K, 14K, whatever the case may be, a lot of the market thinks that we're just going to bounce. And in order to bounce, a V-shaped recovery is something that requires a lot of demand. And there is no demand. There's no demand in the markets right now. There's no demand in cryptocurrencies. There's a lot of people, getting the fuck out, especially institutional investors. When you look at the global economics, global political situation that we're looking at from an investment point of view, a lot of the world is risk off. So where is the demand? Do not expect a V-shaped recovery is kind of the long and short of that. But my target is down here in the honey hole of around $14,000, $14,000 to $12,000. Do we have to get there? No, we don't. I would be happy to see us sit on top of the 200 week, which is sitting at around $22,000. So maybe we don't even get down to $20,000. That would be another way that Bitcoin would fuck with a lot of people, because if we got that close to 20, people will be like, well, we have to hit 20. We have to hit 20, and then they won't be prepared for the reversal. But the reversal happens on the smaller time frames. Good morning if it's morning to you. Let's see who we got in the chat here. Chris, welcome in. Kahuna, aloha as always. Got you playing while grilling dinner. Dinner? Well, let's go. What are you grilling? You grilling steaks, burgers, hot dogs? What you got? It's kind of a hot dog economy, isn't it? What's going on, Gravy? Stonks up, crypto down. This is the decoupling. This is the decoupling. We're decoupling from traditional finance. Finally, we're able to fall when traditional finance rallies. The pre-market and early market of yesterday's session was bearish, and that's all it took. That's all it took for the crypto market to continue. There was like a hesitation in the markets. I'm starting to see that. Crypto will ebb and flow through different global volume. I don't know the appropriate word, but sometimes crypto will move during the Asian trading hours. Sometimes crypto will move during the American trading hours. Lately, it's been the American trading hours. So there's always going to be a pause and a lull in the pre-market open of traditional finance, of equities markets. And then once they open, crypto typically takes the context of whatever that is. And the open was bearish. We did close bullish in equities, but the open was bearish. That's all it took for the crypto market to give up a little bit. Good morning, Patty. Ursa Minor, evening. How's it going? All right, so let's go into some smaller time frames. The weekly is still intact. We have our targets discussed. Let's talk about Bitcoin on the daily. So, a little glimmer of hope, at least something that we can be looking at. So in this downtrend, typically speaking, when you get a conclusion of a downtrend, you'll have a high volume event. We do have a high volume event sitting at kind of a support level, not the strongest. This support level does come with some caveats. But basically, we're looking at this. So we are holding this level. And when we zoom in on this consolidation sitting at support, you can see that there are lower lows and higher lows in the RSI. The RSI is oversold, so there is definitely a potential for a bounce here. I'm not really holding my breath because this downtrend has been quite relentless. It's basically we take a leg down, stop, take a leg down, stop, take a leg down, stop. We haven't seen really much of a rally since the all-time high. There's been a little bit, I suppose you could call these little rallies here inside of this consolidation, but nothing that's kind of gone up and tested new levels. Now, if there was a rally at this level, I'm certainly not calling bull market, although crypto Twitter will definitely disagree with that sentiment. I'd be looking at this level right here for a possible bearish retest. So that would be the area of around 38, 39, possibly even $40,000. Get a rally up to 40K, and then a reversal right back down was what I would be looking at. Now, I'm also entertaining the idea that maybe we just don't do that at all, and we just fall through the floor right here without a bounce in the oversold condition. So that's also something that I'm entertaining with my money as well. I am in a short position on BTC. So definitely a little bit of bias there with any of the analysis to the short side. Obviously, I'm going to expect further downside because I'm positioned for further downside. So take that with a grain of salt. Taking a look at alpha numerics, we are just pinned below this 7-day moving average here, the 7-period exponential average here. The wave is red, pushing us down. We are in bearish alignment. Now, there is a bit of divergence with the EMAs. You can see that the EMAs have been, the short-term EMA has pulled. Let me actually turn price off for a second. The short-term EMA has pulled significantly away from the long-term moving averages, and now it is beginning to converge as well. So we are coming in towards the EMAs. That's typically something that you get to see a little bit of a short-term bounce, so I'm not taking a bounce off the table. You can see we get a divergence, then we converge, you get a bit of a rally. Let's turn price back on. We diverge, we converge, get a little bit of a rally. We diverge, we converge, get a little bit of a rally. So there's definitely possibilities of a rally here. Now, these are just technical indicators in a market that has no demand, so you need to take this with a grain of salt. But yeah, let's go down into some smaller time frames here. Let's take a look at that 1 hour. 1 hour getting a rejection from the top of the channel here. Short position in play, in profit. And what I'm expecting here is I'm looking at this as Wyckoff redistribution schematic number 4. So if you're unfamiliar with the Wyckoff method, it's similar to pattern trading as there are certain chart patterns that you look for, but they're different in terms of the fact that you can kind of leave a pattern or you can leave a structure. So like, for example, let me make this kind of a little bit more clear. You know, if you draw a triangle, you know, a lot of people are familiar with these, triangle patterns. As soon as price leaves, what is this? As soon as price leaves the triangle is considered to be invalidated, or it has broken out of the triangle. In Wyckoff, it's a little bit more nuanced. We're trying to interpret the trading range, and we're looking for signals. Now, one of the key characteristics that you look for in a distribution is A, the context of a downtrend, and B, several up thrusts. And an up thrust is simply a failed rally. So if we go ahead and take a look at some of these, we have a failed rally right here. Up thrust. We have a failed rally here. Oh, come on. Up thrust. Up thrust. Up thrust. Up thrust. And another up thrust. So throughout this consolidation, we're seeing a lot of failed rallies. This is indicative of redistribution. Anytime there's a rally, people are bailing on the position. So this is, not what you want to see if you're a bull. Certainly what you want to see if you're a bear. Basically, you would short every single one of these rallies. Going over, if you hop into the Crypto Jungle Discord server, we do have a channel, a free resource under the resources tabs. You can go to diagrams and you can pick up a copy of the redistribution schematics. There are 4 here displayed in the server, and the one that we're looking at is redistribution schematic number 4. The characteristics of that are a large shakeout and then a trading range that presents itself on top of the shakeout. So you can see how this is a trading range that stays range bound. This is a trading range that stays range bound. This is a trading range where we break below and trade below. This is a trading range that presents itself on top of, sits on top of a shakeout, and that's exactly what we're looking at here. Shakeout, trading range sitting on top of. So if this is to kind of play out, we might see a little bit of a rally up to here, maybe a sign of weakness through the bottom of the trading range, something like that, failed rally, and then finally get that move to the downside, something like that. I mean, you can't predict the future movements of the candles. You can just take the generalized approach of looking for advantageous entries, let the price do what the price is going to do. You can't really predict the ebbs and flows of price, but the overall structure we can look at is either bearish, bullish, or flat. Taking a look at, let's take a look at ETH. ETH USD on the FTX chart. You know what? Let's actually take a zoomed out approach to ETH here. Oh no, I deleted it. Why did I delete it? But we're looking at a distribution here. Macro distribution, macro top inside of Ethereum, which, we're entering a bear market. I mean, we're in a bear market. We're in a bear market. So if this distribution plays out, we would be looking at a price range anywhere between basically $630 to $330. Pretty fucking bearish, right? That's a hell of a retrace. It's not impossible. If you think it's impossible, you're not prepared, and you're probably new to crypto. This is volatile. That's why you're here. Volatility goes both ways. It goes both ways. Shout out some tickers. Let's take a look at some stuff. I'm going to go ahead and take a look at Solana USD on FTX, the best trading experience, the best user interface I have found out of any trading exchange, centralized exchange. I love FTX. Sign up for FTX, and you can get a free month in the jungle using my affiliate links below. Take a look at the link tree there. So Solana, not great. Here's the thing. I'll cover my targets here for Solana. We're looking at anywhere between $6.30 to $16 in Solana. But here's the thing to really understand here. Let's go and take a look at Bitcoin dominance. So BTC.D. And I want to talk a little bit about Bitcoin dominance. Whimsy, the crypto hippie. I'm here live. Hey, Baloo and gang. So Wyckoff, 2 cycles for me of leaving profits on the table, walking away with less than I started. Need a better plan. You know what? I can tell you that, If you fuck up the third cycle, you're not a trader. But I will say that most people, the majority of people, do not fuck up their third cycle. Okay? Typically speaking, it takes 2 to 3 cycles to become a proficient and profitable trader. So anybody coming in now, if you came in 2020, 2021, and you lost a bunch of money, I'm not surprised. It's just how this thing works. You know, you come in during the good times, you see how easy it is to make money. Sure, you made some mistakes along the way, but you're certainly not prepared for the downside risk. But guys, your first cycle is a wash. It's always a wash. It's always going to be a wash. Crypto specifically, because of the volatility, the emotions are cranked to 11. You're never going to, you know, you have to be a very experienced trader before to even have a chance at making it work in the market, in a crypto market during your first cycle. If you fucked up your first cycle, congratulations, you're a normal fucking human being. You know, it's not a big deal. Second cycle, I'm sure you learned things, and third cycle, you're gonna fucking take profits. Either that or stop trading. So yeah, back to my point on Bitcoin dominance. Basically, when this chart is rallying, what that can be boiled down to is alts will rally less and they will dump more. Bear markets are brutal. If you don't have a Bitcoin position, the dumps are going to hurt a lot and the rallies are not going to be very great at all. The rallies are going to be weak, sometimes just at par with Bitcoin. A lot of people don't hold Bitcoin because they think that the gains aren't there. They want big moves. In a bear market, if Bitcoin rallies 5%, your altcoin might rally 4%. And then when Bitcoin dumps 5%, your altcoin dumps 10. So as long as this chart right here, BTC.D, is rallying, that's going to be the case. You're going to see shitty rallies on the alts, and you're going to see devastating dumps on the alts at the same time. Now, my target for Bitcoin dominance is up at around 60%. I think we will revisit the areas of around 60% dominance inside of Bitcoin before we start to even begin to have the narratives of good quality projects. And once we get to this 60% level, that doesn't mean that your altcoin will rally. That means that the new altcoins that are coming out at the end of the bear market will begin to rally. Every market, there's new innovations. Every market, there's new altcoins. And, you know, a lot of the ones that we had in this cycle will not be around in the next cycle. It's just the fact of life, the circle of life of cryptocurrency. All right, so let's take a look at some, you know what? Let's catch up with our shitcoin bingo. Where is our shitcoin bingo chart? Let's see how shitcoin bingo is doing. Let's see if we have any flashes. Starting off in alphabetical order, giving us Cardano. Going to the weekly with alpha numerics on. No green diamond yet, no buy. For those who missed shitcoin bingo, go ahead and check the show notes. Go and or if you're on Twitch, you're gonna have to go to YouTube and check out some of the videos that we posted on YouTube. Basically, we're gonna prove the efficiency of this indicator, of the alpha numerics indicator, offered by our own in-house Bitcoin maxi, alpha numerics. Shitcoin bingo. Yeah, so these green diamonds on the weekly are very, very powerful. So we're wanting to prove how powerful they are by buying just garbage, just fucking shitcoins. Cardano, you know, we can have a debate. We're not actually, no, I don't want to debate with you about Cardano. It is what it is. It's kind of a cult. It doesn't mean that they don't have a product. It just means that the product is overvalued. Cardano, no signal just yet. Ape, this was kind of a weird one for us. I don't know if there's just, I don't think there's enough data. If we do get a weekly green diamond, then hey, but we don't even have the RSI on the week just yet. So it is what it is. CRO, also no weekly diamond. We need that last capitulation. We need that last capitulation. Taking a look at Doge. Doge is getting close, not quite there just yet. Shiba Inu, also close, not quite there just yet. Solana, getting close. Maybe we don't go as deep as what I thought with Solana. We'll see. We'll see. Again, price predictions are pretty useless. They're pretty fucking useless. It's the event. The event is so much more important than the price attached to the event. So when we see that capitulation, when we see that high volume event, that's when we're going to take these positions. And the price attached to that event, who fucking knows, man? Who knows? You're looking at macro analysis. The price is irrelevant. Taking a look at Theta, also, abysmal volume on Theta. Just a garbage fucking shit coin there. Not getting ready to flash, but man, nobody gives a fuck about Theta. Nobody. That volume is pitiful. It's barely even showing up. Nothing. Nobody trades this shit. None of it. Taking a look at VeChain, a little bit of a blip. Not even close. VeChain's kind of the strongest one, which, you know, in the context of a bear market means that it's fuel for capitulation. XRP as well. A little bit of volume there. Not ready to flash just yet. Zilliqa. What is all this garbage? I got all these drawings that I don't need. Zilliqa. Man, what a fucking trap. What a trap that was. A lot of people probably got really excited. And we're going to end up going to a lower level in Zilliqa. Luna, I'm just watching it. You know, we did do a video on it. We didn't release the video on Luna for obvious reasons, but it is on our watch list. I don't recommend that anybody put a ton of money on Luna. I would be lying if I said I didn't, and I would be lying if I said I didn't make a shit ton of money buying the bottom of Luna. But, you know, that trade is done. Those profits are closed, and I don't trust jack shit. Sushi been pumping? Really? Let's take a look at Sushi. I wonder why. It's fundamentally bullshit. It's losing liquidity, so kind of could be an opportunity to get the fuck out of Sushi. Let's no, I'm so down. This is not an opportunity for me to get out of Sushi. But man, we're almost at fucking VC dump levels. This is typical of what you see in new projects, by the way. You get a large pump on launch. Venture capitalists take their profits. Then you reach a bottom. I would love to see us come back down to that level, which would be around 67 cents. Fuck yeah. 50 cents. The liquidity is a problem right now on Sushi. It seems to have the shittiest pairs, the shittiest arbitrage. The lowest amount of pools, kind of some developer drama as well. Their core dev team just they don't really have like a core dev team, so it's very much a volunteer project at this point, which is not great for a high quality project on the blockchain. I've started to use 1inch a lot more. So shout out to Tio at the Arcane Bear for always beating that drum. 1inch is the best. It's the aggregator. It's going to find the best price for you. As the consumer, that's the one. FTM pumping. Everything's just, it's a zombie pump, man. But let's take a look at FTM anyways. Oh yeah, really getting out of hand there. Here's the thing. When you're in a capitulation, we are just trying to find a floor. When we find a floor, we do not fucking bounce. We do not bounce off of that floor. You get an automatic rally for those who understand the Wyckoff method, for those who have done, your analysis or understand the Wyckoff method. When you reach a seller's climax, there is an automatic rally. And then what comes after that is accumulation. And in the context of a bear market, we're looking at around 12 to 24 months of accumulation. There could be about 3 months of accumulation before we get our macro automatic rally. But, from a big picture point of view, we will be trading sideways for years. And buying during that accumulation for the retail investor is very, very difficult because you're so close to zero. You're so close to the lows. It's very easy to have 50% retracements. So you'll buy 50% retrace. You want to kill yourself. You'll buy again, 50% retrace. The thing about 50% retracements is they can happen at any point in the chart. You could be so close to the bottom of the lowest price that's ever occurred, and you can still get a 50% retracement. Andre's back. Who gives a fuck? Who gives a fuck? What a bullshit. Guys, like the insider trading. fuck me. Like, it's just a move, man. Andre, what a fucking douche. What a fucking douche. You know he fucking bought a shit ton of FTM and then tweeted he's coming back. You fucking know it. And if you don't know it, wake the fuck up. Seriously. Wake the fuck up. It's a move, man. It's a move. The dude's just fucking milking it. You can cut something in half forever. Exactly. Do you still get the alphanumerics indicator with the Crypto Jungle subscription? Morgan, we do not offer that anymore. It's been a part of the Jungle membership for, I think it was 18 months, the better part of the entire bull market. That indicator came with your membership. But Matt, he's his own guy. You know, he's one of our analysts. That's his product. He was generous enough to give it to us for, you know, basically 18 months for free. And, you know, it's his product. He wants to make money off of it. So, no, it is not included with the membership anymore. If you signed up while the membership was available, it's a lifetime subscription. So thank you, Matt, for being so generous and offering that. But I understand as well. You know, we can't, it's a high quality product. He does offer a discount. I believe he offers 20% off. Could be wrong. I'm going to have to get the coupon code from him for that. But yeah, no, it's no longer part of your Crypto Jungle subscription. Speaking of Crypto Jungle subscriptions, we do have some new packages. So we do have a quarterly package and a 6-month package for the Crypto Jungle. And as a celebration to those who are still here in the bear market, honestly, the bear market is where all of the benefits come to you. So one of the benefits that I'm offering is I'm offering 25% off your next 2 payments of any package that you choose here. So that includes the yearly package as well. If you want, which is about $37 a month with a 25% discount, that brings it roughly to about $28 a month. So if you sign up for the yearly package, you'll get 2 years of 25% off. If you sign up for the 6-month, you'll get a year of 25% off. Quarterly, you'll get a half a year of 25% off. And for the monthly, you get 2 months of 25% off. If you're not sure and you just want to try the jungle, we offer 2 days free. So you can go check out the links below and try the free trial for 48 hours. Come in, take a look, say hi, see what's what. And if you like it, then you can apply the coupon to any of these other packages as well. We trade, we share setups, take profits, entries, exits, all that good jazz. But more importantly, we teach you what to do. Risk management is number one. It's number fucking one. TA, it's just a bunch of dudes coming up with ideas. Ladies and gentlemen, coming up with ideas. Technical analysis is an idea for you to apply to your strategy, and your strategy includes proper risk management. So if you don't know what risk management means, if you don't know how to calculate a position with 1 or 2% risk positions, then come into the jungle, because honestly, trading is more of a game of survival than anything. If you are able to move in this market and never get liquidated, never lose your account position, you know, we trade in a way that's infinite. You know, if you have 1% risk and you're whittling away your account, guess what? Your size is scaling alongside your position. So it's infinite. You will never be taken out. You will never blow your account out, ever. And the inverse is true. As the account grows, it's infinite to the upside. That's how you get to $1 million trades. Slow and steady wins the race. Slow and steady. Gibson's, greetings, Baloo. Holding Solana, DOT, other quality alts for over a year that I never sold. Would it be stupid to dump these alts into cash for BTC? You know, it's a lose-lose for me when I talk about specifics for anybody's portfolio. You're sitting like we're done, man. Like we're so close to what I perceive to be a bottom, a short-term bottom. So, you know, making those types of decisions now, I do think is kind of, you know, not the best way to approach things. You've already committed to them. If they make up too large of a position of your portfolio, I would consider, maybe bulking up the cash position. But here's the thing. It's a lose-lose for me. If I tell you to sell and it fucking pumps, you're angry. If I tell you to hold and it fucking dumps, you're angry. We don't know what the future will bring. It's very important. And the way that you're able to trade without knowing what the future is through risk management. So when you're holding Solana, when you're holding DOT, and it takes up too large of a position of your portfolio, it's poor risk management. Yeah, coulda, shoulda, woulda. I'm not going to beat a dead horse here. But what I'm trying to say is, it's really kind of unfair to put me in a situation where I'm forced to answer those questions, because it's not something that I would have ever found myself doing because of, the strategy that I employ when investing in anything. I can fall in love with a fucking project. I mean, you guys know how obsessed I am with Olympus DAO, but I don't fucking go all in. Olympus DAO traded to like fucking nothing, and it doesn't affect me. It doesn't affect me emotionally. It doesn't affect my portfolio. And it's because, these risks are calculated. So, I'm not trying to make you feel bad. I'm not trying to point you out, because honestly, this is a mistake that many people make. Many people, okay? You are in the majority of humans. This is just how it works, especially if you're on your first cycle. This is just how it works, okay? So don't beat yourself up. What I would recommend is just don't try and fix what the situation that you're in right now. Just try to correct the decisions that you make in the future. How you handle the short term is honestly entirely up to you. But the big picture situation here is you need to correct the decisions that you make moving forwards, as opposed to trying to correct the decisions that you've made in the past. Stick to, whatever plan you had, but, don't hold me accountable for any of the decisions that you make. Might have missed this, but how long does distribution play out? Months? How many up thrusts until we fall towards the bottom of the range and then die out? So distribution can be observed on many different time frames. Here on the hourly, I'm looking at distribution. So this would be something that would play out in a matter of days. Whereas when you zoom out to the macro, this is distribution right here. Basically, we had our preliminary supply right here and our buyer's climax right here. We're just leaving distribution. This whole thing is distribution. We're just breaking out of the distribution. So this one has been going on for, we're just breaking out of it now. It's been going on for over a year, about a year and a half for this distribution. So it depends on the scale that you're looking. And accumulation is the same as well. Accumulation can take years. Like in equities, Tesla's a fantastic example. Let me show you the Tesla accumulation. Let's go to the weekly here on Tesla. And let's zoom the fuck out here. We got accumulation, we got reaccumulation. Let's just count the reaccumulation. Let's see what that looks like. So the reaccumulation on Tesla was 2,000 days. 2,000 days. That's why Tesla did this, because the cause built the effect. It's one of the 3 laws of Wyckoff. There's supply and demand. You need to analyze when the market has demand in control and when supply is control. Effort versus result, which is how much price can move depending on how many traders are trading it. And then there's cause and effect, which is the accumulation. How long is the accumulation? Because the longer the accumulation, the larger the markup period. How long is the distribution? The longer the distribution, the deeper the correction. So these are the 3 laws of Wyckoff. And it's no wonder that Tesla did this, because fucking 2,000 days of accumulation on Tesla. So there is no answer. What ends up being the answer is the longer you are in a certain state gives you the downside or upside targets for that cause, the cause and the effect. Right, just thinking BTC moves first in this environment, not holding you accountable, just wondering what you'd do in that situation. Okay, well, if you're asking me what I would do, I would take cash. Okay, now don't hold me accountable. I would take a cash position. And the reason is because I would accept the move as a mistake, and when it's a mistake, I cut the loss. Okay. I swear to God, if we fucking dump tomorrow, I don't want to hear it. For me, in those types of situations, like if I cut a trade and it's in the context of a dump and it pumps the next day, that's just further cementing the fact that I made a mistake, okay? And the whole thing is a mistake. Even if it pumps tomorrow, the whole thing is a mistake. So if you're asking me what I would do, I may not close the positions entirely, but I would make sure that if I don't have a percentage of my portfolio that is ready to buy dips, meaning that I have, a 20 to 30, maybe 40 or 50% cash position, I would try to get to the point at which I would have a cash position so that I can execute on the good trades. Okay. And move forwards with a plan. That's it. Okay. That's what I would do, and watch it fucking moon tomorrow. We don't have the answers, man. We don't have the answers. All right. What else do we got cooking? How's KNC doing? KNC has been having some fun lately. Nice pump, then a big dump, then a big dump and a pump. Short term on KNC, looking at the hourly. I kind of want to see this rally a little bit. I was looking at this, not enough of a range has developed. It's possible that we come down for a sign of weakness and get trapped under this line at around $2.35. If that doesn't occur, then I can't get a good read on it. And when I can't get a good read on it, can't get a trade on it. It's just the way it is. Another one that's weird, I know I've mentioned this a few times, and it continues to be weird, is Tron. Don't know what's going on with Tron, but you can see here, like, let's overlay a chart. Let's add Bitcoin. Come on. Let me add a chart. Plus button, plus button. Okay, anyways, forget it. Bitcoin has had a large volume event with a capitulation. Tron didn't make a new low. It didn't make a new low. So one of the things that we do in Wyckoff is comparative analysis. You want to compare assets in their sectors to determine or to identify leaders in the space. I don't know what the fuck is going on with Tron. The best that I can figure out is Tron has USDD, which is a decentralized US dollar. It's an algorithmic stablecoin, just like fucking UST was, so proceed with caution. But what it means is Tron is being burned. And if Tron continues to be burned, we could see a significant reduction in the supply and some interesting price levels. But, please do your own research. The market is certainly working against you in these market conditions. I'm just noticing that there's a resiliency in Tron that I have not seen in any other crypto. The crypto market is a very highly correlated market, and this chart stands out. This chart stands out as an anomaly. There's something weird going on with Tron, so I'm definitely laser focused on it, wanting to get a good position on this one. Still got cash. Just hate to see some, just hate to hold some garbage. Fail to execute like many people waiting for the blow off top. Hey, I can resonate with that wholeheartedly. A lot of people were waiting for the blow off top. I made mistakes waiting for the blow off top, so don't feel bad. Totally failed to cut the loss on the way down. Thanks, Blue. Yeah, no problem. If you've got cash, you're in a much better position. I find when I talk to a lot of people, and I don't know your specific situation, but I find when I talk to a lot of people, they go all in, meaning that they're all of the capital that they have put into crypto is denominated in some sort of altcoin, BTC. But the point is they don't have a cash position, and those people get kind of hurt. they kind of lose all their money. But if you have a cash position, you're already in a much better place. So don't beat yourself too much. Don't beat yourself up too much. It's part of it, man. It takes a few cycles. To get the swing of things. And if you want to, for those who are in their first cycle and you don't want to fuck up the next cycle, invest in your education, join the crypto jungle, sign up for $28 a month, and we'll get you up to fucking speed. Use the coupon code BEAR. I don't even know if I said the name of the coupon code last time. The coupon code is BEAR. Let me write it down. Coupon code is BEAR. and put it in YouTube as well. Coupon code's bear. All right. Let's see what's popping up on the crypto screener. How much time do I got? I got a little bit of time. So we'll go back to FTM. Let's go and check out the crypto screener. What do we got? 20K, don't waste your time. It won't go more. 20K, don't waste your time. It won't go more. I don't know what you're talking about. Razor 911. If we get to 20, I mean, a lot of people waiting for 20. I think we blow past 20 or we don't touch 20, because that's typical Bitcoin. Bitcoin likes to fuck with you. So if people are waiting for 20 and 20 doesn't come, they'll continue waiting for 20. If people stack orders at 20 and it fucking blows right past to 14, people are going to be scared off because it shouldn't have retraced that low. Possibility of a bounce here, but there is definitely, well, I never speak in terms of definitely. I'm highly convicted to further downside. What's popping up on the screener today? Got 24 matches. We matched 24 matches. Bitcoin, ETH, not surprisingly. Solana, we took a look at. FTM, we took a look at. Let's take a look at Avalanche. Avalanche is doing some volume, man. Avalanche is doing some volume. Getting close to my target. My target's around 20 bucks. I really like Avalanche as a side chain as an Ethereum compatible side chain. I really like Avalanche. I think that Avalanche is a very it's a very well designed blockchain. It's one of the more innovative blockchains as far as a EVM compatible blockchain. The fundamentals, I'll just boil it down to this. I like the fundamental design of Avalanche. Do fundamentals matter in a bear market? No, they fucking do not. They do not. Price matters in a bear market. So the price that I would be looking at is 20 bucks. If we fail to hold that level, then we'll come back down to fucking 10 bucks, sub $10 levels. Don't think we're quite done here. Kind of no divergence playing out in the RSI. We are confluent. And yeah. Didn't Do Kwon dump Avalanche? Yes, he did. Dumped Avalanche, dumped Bitcoin. Liquidated billions of dollars. Trying to save his dumb little project. Market sell on the DEXs. Incredible arbitrage opportunities. Does anybody do arbitrage? I'm curious. Has anybody ever programmed flash bots or taken advantage of arbitrage opportunities on chain? I'm curious how nerdy, and I mean that in a very endearing way. I mean that in a very endearing way. Do I have blockchain nerds on my stream? Is there ARB people on my stream? Because if you are, please join the Discord. I've got a lot of questions. After we hit a Bitcoin bottom, would you expect alts to still go lower moving forwards? Yes, I would. Yes, I would. As long as Bitcoin dominance is trending to the upside, every rally that Bitcoin has, the alt will rally weaker, and every reaction that Bitcoin has, the alt will react harder. Alts get decimated. They get absolutely fucking decimated during a bear market. Is anything to be read in on-chain transaction volume on Solana? Seems suspiciously higher than ETH. So, I mean, more people are using Sol for the on-chain transactions. ETH, you need to take into account optimism, Arbitrum, and now ZK. We have ZK rollups on Loopring. So, you know, Ethereum is moving forwards. Ethereum is moving forwards to the next phase, which is layer 2 transactions, not side chains, layer 2s. So Arbitrum, Optimism, ZK rollups, which what they're doing is they're taking what would normally happen on chain. They're taking all these transactions, they're making their own block on their own, second layer block, condensing it into one transaction and then posting that to Ethereum. So the transaction volume on Ethereum should be going down. That's what we want to happen. That's a really important and that's a huge step forwards. That's what we want. It's the same thing with Bitcoin. You know, Bitcoin's Lightning Network works a little bit different than Ethereum Layer 2's. But with Bitcoin on the Lightning Network, we're basically signaling to the blockchain an intent with another user. We can set up a channel between you and me, and we can do, you know, hundreds and if not thousands of transactions between each other. And then when we close the channel, we post it to the blockchain as one transaction. So transaction volume on a layer 1 where all the transactions are happening on layer 1, like Solana, it should be doing a higher volume than a blockchain that has layer 2 solutions on it. Doc getting really hit in at the lows. Could you take a look? Let me know what you think of the chart. Well, Doc is a shitcoin, my friend, so it's going down into the crypto abyss alongside everything else. Ooh, and it's a liquid, man. There's no liquidity to something like this. So when you're trading a chart like this, you cannot put basically when you're mitigating risk on a really high risk altcoins, on a really high risk altcoin, when you're trying to mitigate risk, you do not use a stop loss. That sounds counterintuitive. Your position size is your stop loss. So if I'm trading Bitcoin and I have like $1,000 stop loss, and I want to trade something like this, Bitcoin, I have stop losses. I'm doing large size, large position using a stop loss. With something like this, you just don't have a clear direction. You put your stop loss in and you don't place an order. You just spot buy with your stop loss. Your risk is fixed and you just set it and forget it. I mean, the timing is terrible right now. I actually think with a project like Doc, let's see, where does it rank? Where does it rank? I don't think this one's ever coming back, if I'm being perfectly honest. Don't know much about it, but I just don't think it's ever going to come back. Internal server. What you talking about? Internal server error? What you talking about, man? It's ranked 369. Okay, well, CoinGecko's not working. Anyways, it's ranked 369. Ugh, it's probably not coming back, if I'm being fully honest with you. It's a swing on the 4-hour entry at 0. Yeah, I just don't mess around with that. You're in profit. You entered where? You entered at 16. 16 on the nose. That's a pretty decent entry. Pretty decent entry. You are in profit. I don't know. What's your plan, bro? What's your plan? Other than buying shitcoins, what's your plan? If we had our stop down at the local low, I would be looking at, I'd be almost damn near fucking closing the position right here. That's your 3-to-1 risk to reward right there. If it were me, I would close half of the position and ride half. See what happens. We're up against resistance right here. Resistance right here. If we can break past, let it ride, man. Let it ride. Let it ride up to the next resistance, which is going to be up here. And if it makes it there, I don't know. I don't have an appetite to have long-term time horizons on altcoins in these market conditions. So if I was in the trade that you are in right now, and I am not you, you are you, I would close half of the position and see if we could get it to ride the rest here. That's what I would do. Yeah, it's a useless shitcoin, but you got a nice trade on your hands. Well done. Well executed. Don't agree with the coin, but hey, you can't argue with results, can you? All right, that is all the time. I got to get out of here. So if you guys are interested in joining the crypto jungle, check out the links below. Remember, the coupon code BEAR will get you 25% off 2 payments. So if you go for the yearly package, 2 years, etc. So yeah, I got to get out of here. Got to jump into the virtual classroom. So thank you all for joining into the stream. Hang in there. If I was a betting man, I think we got a little bit more downside. If we achieve that downside, we're going to be due for a bounce. And I really think that the market will be ready to provide the demand required to give us a bit of a bounce. Who knows as to how long it would go on for, but we're getting really close to the points at which I get very excited. So, you know, I'm just some dude on the internet. Take that as you will, but thank you all for joining in. Please don't forget to like and subscribe and trade safe. It is a jungle out there. Peace.